What's going on, everybody? Hope you all had a good weekend. We got some interesting economic news, some interesting political news that's also economic, I guess, in the long run. But I had a guy leave a comment on one of the videos from last week on one of the stock crash videos, and he said, if this is a stock crash, then I'm 6'7" and black. And I'm assuming he's just a random dude, and he's just saying, in his mind, obviously, there's no way this is a stock crash. My whole point of the video was really to not panic that it's not a stock crash every time the news comes out and reports that it's a stock crash, because that's all they want to do. They just want to fearmonger as much as they can. It's all about the clicks for anybody reporting things. And I mean, that goes for me in the same sense. Like, if I'm making a YouTube video, I obviously want you to click on it and watch it, but I'm going to still do my best to be straight with everybody and keep it honest a little bit. And like he said, I don't necessarily think it's a crash, but it seems like there's some cracks starting to show. And I think if I remember correctly, a crash or a bear market, I guess, not necessarily the same thing, but a bear market is like defined as a 20% decrease in the market. And we are hitting that. Like Bitcoin actually, I think, has just entered bear market territory. Crypto's a little different game because it's so volatile. And the stock market's not close to 20% down from its all-time highs that we just hit a little bit ago. But we're on the way there. And what I really want to talk about was this Atlanta Fed GDP. It's called GDP now. I don't know why it's called that. It's a GDP projection for this quarter of the first quarter of 2025 that's going to come out here soon. And they've revised their number down twice that I've been paying attention to / seen in recent times. In the middle of February, their number was 2.3% positive GDP growth. 2.3% is pretty good. The United States economy is obviously huge. 2.3% positive growth, all good stuff. They revised the number last week to negative 1.3% GDP, I believe. The number that's more important is they just revised it again. Now we're at negative 2.8% GDP growth in the first quarter of 2025, which I don't know if they run off fiscal quarters, so I don't know if it's technically like not 2025. I can't remember off the top of my head. The Fed, the giant quasi-public entity that controls the money printing in the United States. This is the Atlanta Fed. I had to look it up because I was curious. There's 12 Fed branches, Fed banks, however you want to call it. The Federal Reserve itself is the main one, and then there's 12 other ones. There's actually one in Cleveland, Ohio here. I never knew that. But they come out with all kinds of economic projections. The GDP is just one of them. I don't think really anything matters except the outlook. And like I said, I don't know when the cracks are starting to form. This looks like a crack to me. 2 quarters of negative GDP is the definition of a recession. I know we kind of changed that. Under Biden, the Federal Reserve kind of tweaked that, and they kind of like, oh, well, technically, that's not really a recession because the job market's so strong and all that. Well, the job market's strong right now. And I don't know. Does anybody want to take the bet that if we have this quarter is negative GDP and next quarter is negative GDP, however you want to attribute it, if it's just the economy contracting, if it's less government spending because all the spending and funding cuts that Trump and Elon are doing, whatever, however you want to say it, who wants to bet that if we have two quarters of negative GDP, the media will run around with their hair on fire saying we're in a recession? And that's fine with me. Like, whatever. That's the definition. But just know when this inevitably happens here in a little while, not inevitably, figure of speech. Don't get your fucking panties in a twist about it. When it happens, if it happens, just remember that I said it, and remember what they did with Biden, because they're going to they brushed it under the rug for him. They got to keep the panic to a minimum. And I think, if anything, just because whether it's their hatred of Trump or whatever, just the media itself, not like the Fed in general or anything like that, but the media, people reporting on this, I think will blow it out of proportion as much as they can to just basically cause panic. Whether we get a bunch of negatives out of that, like actual stock market crashes or anything, I don't know. Who knows what's going to happen? And you're probably tired of hearing me say that if you've watched multiple of these videos. Well, I'm tired of saying it, honestly. I'm not a very patient person. A lot of things, honestly, it's kind of hard for me. But all these financial things take kind of a long timeline to play out. and that's just the nature of the beast. Honestly, it is what it is. And that Atlanta Fed report is, like I said, maybe a glimpse into what the future is. Because if we start having negative GDP, we hit two quarters of that, we say, oh, we're now in a recession. That causes people to save more money, which means they're spending less, which causes even lower GDP, which basically, like, it's a self-fulfilling cycle, honestly. Like, so you predict low GDP, you have low GDP, recession, people panic, save more money, drives the economy even lower and lower and lower, and it just loops around on itself. Stock prices fall, home prices fall, everything can fall. Will that happen? I mean, my guess is as good as anybody's. I think we have a pretty good shot at it happening. And I've talked about it before on here, the yield curve. I was listening to some stuff about it today, trying to read some things about it today to just broaden my knowledge on it, because I know what it is, but I don't technically, I'm not that educated on it, to be honest. The big deal is basically the yield curve is when they look at the bond yield rates, so basically interest rates, 10 years and versus the 2-year. In theory, if you take a 10-year bond out, you're going to want a bigger return on 10 years because it's 10 years away. They're going to give you more interest if you buy that bond because it's more of a risk. You're holding it for longer. The 2 years should be lower. We just got back to that philosophy before, a little bit before last year. It was inverted. The 2-year was actually riskier as far as outlook and paid a higher interest rate than the 10-year there for a little while. This inversion is what they call yield curve inversion. Can, not always, but can be a signal for recessions. When it inverts is a thing people pay attention to, and when it uninverts is a thing that people pay attention to. There's been 2 instances from what I could remember from the thing I was watching earlier. 1967, I believe, and 1998 were 2 times the yield curve inverted and uninverted, no recession. But the next time it inverted and uninverted, there was a recession. And then every other time they've been keeping track of this. So 2008, or I guess COVID, 2008, 2001. I believe there was one in 1980 when the interest rates were really, really high. Those all were inverted yield curves. They uninverted, recession. When it happens, I don't know. This inversion that we just had was a bad one. It inverted steeply on the chart. You can see this. This is a downfall to this format. I'm just talking. I can't show you the chart. I wish I could. Maybe I can try to edit it in here or something like that. This inversion has been steep, so the disparity between the 2 rates, the 10 and the 2, is bad. If it's going down, it's been steep. We went low between equalizing, and it's been long. So they were inverted for a long period of time. In my mind, from looking at that chart, like I said, if you just took a glimpse at that chart, I'll link it at a bare minimum down in the description. You can take a look at it. This looks like 2008's inversion more than it does like 2001 or any of the other ones in recent memory. It doesn't sound good to me. Like I said, just another indicator. We've been riding the highs of crazy government spending and the job market being good, they say. My personal opinion is all these numbers can be fudged to kind of give out whatever kind of outlook you want, honestly. And I've seen people already speculating on Twitter and on YouTube and things like that. And I kind of somewhat agree that the last 4 years they've been kind of fudging these numbers a little bit. And this GDP switch over is them trying to actually correct. And now, and it depends, obviously, that's a little bit conspiratorial, I guess. Depends on who these people are and if they have political motivations, I guess, behind what they do, which I think in a lot of cases they do. They're going to make Trump look bad. They're going to just put it on him. Whether it's his fault or not, maybe. I think it's both. I mean, I think first term Trump has obviously more of a outlook on it than this Trump, his term now. But I think Trump and Biden both blowing the spending out during COVID screwed us. We're going to pay for it. Whether we pay for it right now, or like I said, maybe the uninversion has happened and we come back and maybe in a year or 2 it inverts again and then we see the real recession. I don't know. We're going to pay for that COVID spending. One way or the other, we're going to pay for it. We didn't pay for it enough with the COVID flash crash, I guess you could call it. So I don't know where we go from here necessarily, but it's interesting to me at the least, and I think it warrants at least paying attention to the economic data. And I honestly, I wanted to say this too. I just think it's so cool. I take it all back about the AI shit, honestly, in the sense of I was using Twitter's AI Grok to like research some of this stuff and just ask some questions. It's pretty cool. I mean, it's just you searching Google in a lot of ways, but it condenses all the information into actually what I'm asking, instead of when you Google something and then the Google preview is just dog shit. Google AI is getting better and better at this also, but I just voice to text it into the Grok, into Twitter, and it condenses all that information into a nice readable paragraph. Pretty sweet. For that purpose, I'll take it back. AI is pretty tight. It seems like I got to check out some of the other ones. I never really looked into like Chat GPT or anything, but it's just because I'm using Grok because it's free. I ain't paying. I can't remember if Chat GPT is free or not, but whatever. I gotta have a computer for that, as far as I know. Anyway, but like I said, warrants some attention, and some prolonged attention as we go into this next year. I mean, next 6 months could get hairy. Like I said, crypto's a little interesting. I think I'll talk about it tomorrow, but Trump's, they're going to initiate a crypto reserve for the United States. In my opinion, that's all bullshit, honestly. Bitcoin or nothing, in my opinion, and I don't even own any Bitcoin right now. I sold all mine. Feel pretty good about it. I sold it at 102,000, and it's at like 85,000 right now. For all I know, it could blow back up to 150, but I don't think so. I made my bet. We'll see where it lands. I don't know. Let me know what you guys think. Tell me if you got something out of the video, like it. Let me know what you think the outlook is. In the next 6 months, you think something bad is going to happen? You think we're going to see a definitive direction being chosen by the economy, stock market, housing market, all these things? Or do you think it's going to take maybe more like a 2 to 5 year time horizon before we see an economic downturn? I personally think it's in the next 6 months to a year, more likely than anything. So you guys let me know what you think. If you didn't like the video, dislike it. Tell me why. And I'll catch you guys tomorrow.